pleasure to be here, right? Despite, like virtually in this supposed to be a closed door meeting. And actually, my honor to moderate this session. I know that, we all know each others, and based on the list of participants here, one way or another, we are very familiar with the sectors, especially Cambodia. So I look at the list. All of us here are representing the investors, and we are all active here in Cambodia. It's a market of our interest. It's a market that I believe probably one of our large exposure country as well. So it's quite a journey for the Cambodian microfinance sectors, a mix of a success story and as well as a lot of challenges. So, and I also applaud the fact that, the institution in Cambodia has been always very transparent. So all of us as, the represent investor here, I appreciate very much, the partner institutions together with the Cambodian Microfinance Association as well. So far, with during this COVID time or normal time, with travel restriction or not, the communication from the partner institution has always been transparent and in a timely manner. However, our sectors has been a lot of long-standing debate remains on the table itself into why such a good performance and the resiliency of the industry. Despite the number of warning signs, right? We were talking about market saturation, we're talking about large average loan size as an issue, potential over-indebtedness, high level of credit growth, refining issues, a lot of things going on, plus, a lot of a media interest in the sector itself. And even now, during COVID time, you all can see that Cambodian MFI sector are coping well with the stress. So the question here is like, what is there in the markets that, we can learn from, what has remained the concern and what we can do. So I would see this meeting, right, which I understood now, it has become an annual platform where we have a chance to interact with peer investors, we have industry experts like Daniel and, our friend from microfinances and, other rating agencies as well who would come here and share the update, concern, and hopefully we can come up with some initiative, right, out of the discussions to able to continue to support the sectors, even for the good time as well as the bad time. So today, in the middle of the pandemic and travel restriction, we're actually very lucky and honored, thanks to the technology, to have people and industry expert investor to share with us the most recent development of the sectors and update on the lending guideline project, right? A sector self initiative that is widely supported by industry players, regulators as well. And, I believe that all of us is already aware what is this lending guideline and probably very keen to understand, what is the status right now, what is the outcome that we would expect in the coming months. So for me, and CMA who's also present here, we based in the country, and INCOFIN being one of the sponsors to the lending guideline project from day one. We go through phase 1 to phase 3. So we follow closely the development of the project and actually very proactively apply the spirit of the lending guideline into our investment mandate. So I believe that this topic is indeed a big interest to all of us here in the room. And, I hope in different forms, all of us have been using the lending guideline as a main ingredient in shaping our investment strategy in the country. So without going too much into detail on all this stuff, right, since we have, our panelists who would be sharing with us all in the room where we are, to just quickly introduce, who's going to be in the panel. We have a Bongoran here. So again, everybody knows Bongoran has been quoted in any of the news on Cambodia itself. So just to honor his title a bit, the CEO of AMK and the chairman of Cambodian Microfinance Association. We also have warned Mr. Wandi, who's also represents CMA, joining us here as well. Then we have Daniel Rosa, of course, the senior microfinance experts, and he's very known the Mimosa project. And we also have Elizabeth Cabetotti, Southeast Asia and South Asia Regional Manager from Microfinanza Rating. So then these are, I don't need to introduce the profile of the speaker either, but quickly before we enter into discussion, right, I want to do a bit of an administrative announcement here in terms of the structure of the discussion. So, we want the sessions that we have here around 90 minutes, right, to be able to, everybody to participate and interact as much as possible. So we will start by the quick introduction from Mr. Burhan, and then Daniel and Elizabeth. We will limit the speaker to speak within 30 to 40 minutes from the beginning to set the scene, to give you more context and update. And then the rest of the time, we would invite the participants, to share the view, feel free to ask questions and all. So without further ado, I think start with Burhan here. The floor is yours. Please, I understood you have a few slides to share with all of us, some update on the sectors, and as well as CMA views on where things are in Cambodia. Burhan, the floor is yours. Thank you.
Thank you so much. Good morning and good afternoon to everyone. I think it's my honor to be part of this panel and also representing Cambodian microfinance associations in the sectors, which I think we have a lot of news I think coming out for few months at least, quite intense. And I'm sure everyone probably follow those as well. So I will share, I think, a number of updated on, how the sector is look like, during the COVID, or I would not say after, but in Cambodia, I think we probably toward the end of the COVID, hopefully, because Cambodia had been also quite a different country, or probably one of the very few country, I think, in the world where I think the COVID case are very, very minimal, and the country itself had not been really shut down or lockdowns or have any restrictions, in the way we work or in general, commute in the country. So it had been quite remarkable, I think, how the country had been progressed, I think, on this front to ensure that I think the economy, the business continue to do as much as I think we can, as hopefully not as usual, but I think under board the easy as easy as possible in terms of how things can be operated in town. I think this is something which normally not public information, so I have to inform that this is quite not a public information. We get this one because of the we working with CBCs and the sector, I think, request CBC to produce what we call quarterly or monthly update on the sector, I think, during the COVID, to understand how things is moving, so that we all can, proactively discuss and act together. And these are actually both banking sectors and microfinance. Microfinance including MDIs and microfinance, bank including everyone in the banking sector. So as you can see, basically there is a dip in terms of new inquiry in April. I think just a matter of note, the COVID start in Cambodia sometime toward end of March. I think April is one of the worst months where the number of cases continue to grow quite fast. The government decided to delay the public holiday during Khmer New Year's and close the doesn't allow people to really travel out of Phnom Penh and so on. And I think April, you can see there's a big dip in terms of the performance of new customer inquiry into the CBC, which I think normally about 400,000 accounts a month, 450 to 500 accounts a month. So I think that you see the dip, but then it's actually start growing fairly quickly from there. And I think I would say by July, basically, I think we look very similar to pre-COVID, like by July, by August, September. So this is how it looked in terms of inquiry. In terms of loan account, you also see the same. There are some dip during the April, May, and then it starts picking up again after June. And the same with loan outstanding. You see some drop in loan outstanding in the sector. Not a lot, but you see some drop, but then start going back again after June, July. If you look at from the sector point of view, when they split, basically microfinance are quite, I think two things. One, I can say we probably hit worse than bank because the nature of customer who we work with, the nature of business we deal with, and our customer base, microfinance seem to have a lot, version, I think like hit version compared to banking sector. I think while banking sector seem to be recover a lot faster compared to microfinance. So that's one of the things which when you see the growth in the sector, actually microfinance doesn't really do as much, but I think bank do quite a lot in Cambodia. The same thing with loan disbursements. We see the dip downs, and now we do quite the same as a pre-COVID. It's about 2 billion a month in September, and you will see why it's different from last year. It's normally because of the holiday. I think sometimes the holiday happened in September, sometimes the holiday happened in October in Cambodia. So that's depend on holiday. But as a trend, you will see, this is basically go back to pre-COVID already. Again, I think the contribution from microfinance sector are quite minimal into that. Like, out of 2 billion, I think microfinance do disbursement about 480 million. I think bank do about 1.6 billion already. I can say that, we within microfinance sector, we still see the COVID impacts remain quite substantial. The impacts on the customer business livelihood incomes are probably still have a bigger impacts compared to bank customer in general, where banks still be able to do it and lend more money and continue to grow. In terms of NPL, you can see the NPL continue to improve, but again, I know you know better than anyone else. I think once the disbursements are growing, I think the absolute amount of NPL doesn't necessarily drop, but the percentage will be dropped because of the loan outstanding continue to increase quite, I think, fairly fast in the past 2-3 months. If you look at split by the two, I think bank performance are actually better. I did not include the detail, but I know one of the driver is also mortgage. I think within all the sector, when they classify by agri sector, business, mortgage, and credit card, and so on, actually, I can say that mortgage, the NPL on the mortgage sector are actually quite low compared to the rest of the sector. Agriculture, I think, demand very high, and the personal banking is actually quite high. Microfinance actually is a little bit higher than, higher than the bank. This is just, again, additional information on the accounts. So basically, the restructure loan, basically we do about 3.8 billion. I think the information here are about probably, I would say, the 90% accurate, because some MFI or bank doesn't report correctly to CBC, but I would say it's not significant. So roughly about 2.8 billion. And I think the most is actually towards small business loan. I think the rest are quite minimal. And here's the balance by banks and microfinance. So I think I just touched back a little bit on the lending guideline. As what he, I think, mentioned, we acknowledge that there are concerns in the sector toward certain practices on competition wise, on customer protection wise, on the professional, on the professionalisms, on code of ethics. I think that's where we initiate the discussions on the lending guideline back in 2016, 17, and then we start implementing it. Generally, the high risk refinancing actually above 5% before COVID. It actually dropped to as low as about 2% in, I think, if I'm not wrong, in May or June. And then we start seeing back now the high risk refinancing start moving back to about 4%. I would believe, I think if I see the number in October, I would believe it actually would go up again. So I would expecting this high risk category would probably go back to above 5% as like pre-COVID in the next couple of months, as competition start hitting up, lending start going back to the market. I think the level of competition in Cambodia are very high. The refinance customer from one player to another would be very high. So that will be there. You look at this graph on the left top, basically, which interesting, basically, despite of a lot of people say, is over lending, people are over indebtedness. But we look at the data. Again, this data is everyone submitted to CBC. That majority of customer actually borrow less than 50% of their income, like their repayment, monthly repayment, actually still less than half of what their income, which I think relatively, is okay, which people be able to pay back. They have enough money to survive and be able to pay back to the funder, the lender, quite okay. I think only very minimal is on the size, which to me, there are some things which we normally looking at it, but I think in generally, over 80% of the market of the customer base actually are in a very safe zone in terms of their income to loan ratio. So in that sense, I think that's where I think you probably see, Cambodia in terms of NPL performance relatively stable. And I think even though in the COVID situation, despite of we do restructure about 10% of the total portfolio in the market. I think the NPL continue to grow to about 2.5% in microfinance institution. And the performance-wise, I think in terms of how the customer would react and how the customer can still fulfill the obligation remain quite high. I think that's in conjunction to what we do. The final slide, which I want to share on, how or what CMA is looking at in the future, I think in addition to lending guideline. So in the past 2 years, what we tries to, I think, get everyone in CMA to agree is to actually looking at, what we call responsible finance. And we actually be able to get that. And we get everyone to commit the money and put into the pool. So we have a 3-year project basically to looking at how do we as a sector be able to looking at in terms of financial literacy, how do we improve the knowledge of the customer to understand the importance of the use of monies and the risk that they carry when they borrow money. We're looking at, working with NBC to looking at different policies and regulations. One of them is also consumer protection law is coming up as well. But we're also looking at the certification process with Institute of Banking and finance, where we actually want to introduce a certain a certain curriculum where the loan officers and the people who work in credit field must be certified, or they have to study and get exams and pass and certify that they do understand about this responsible inclusive finance. We also looking at how do we actually monitor similar to what we do for lending guideline, where CBC issue a report on monthly basis to see who follow and who breach the rule. I think we want to do the same. How do we actually get independent party to certify, to monitor that everyone actually follow the rules that we actually agree to actually follow. So I think those are the framework where we work together. And I think the good thing is that now both a lending guideline and this responsible and inclusive finance is not only within CMA. We had been working very hard with regulators, with many other people. I think we be able to get ABC, the Banking Association in Cambodia, to actually agree to, number one, agree to adopt the lending guidelines. So our teams and our consultant is still working on the projects to really moving forward, get the banking sector also part of the lending guideline. And also we set up a committee at the Banking Association level called Financial Inclusion Committee to actually govern this activity, including customer protections, financial literacies, ethical issues, lending guideline, and also public relations. So I think those are another step which we as a sector had been working in the past, I think 12 months at least, to really work together to get probably more and more players to follow or to adopt the standards and be able to act together to ensure the sector actually, in terms of risk, are minimized to the sector itself, but also to ensure that the customer get fair judgment or fair treatment from every provider in terms of when dealing with issues like ethical, consumer awareness, and when dealing with problem when customer have. So those are the activity which we are working on. It's not going to be end this year. We do hope next year we would achieve maybe by half of what we hope to do, and by 2022 we hope I think the whole framework will be complete and adopted across the board. So that's how I think we as a sectors, I think looking at in the next 12 to 24 months. So I would end my presentation at this stage, and I believe we can have more discussions, and also welcome your common feedbacks or suggestions. I think from the experience elsewhere to see how can we probably improve and do better than what we probably plan to do. Thank you.
Okay. Thank you, Bong Boran, for like setting the scene and give us some of those like the figure. I think it's not always easy to get the numbers from the banking sectors as well. So all of this graph that you share here is actually give us quite a bit of a flavor to understand like how the microfinance sector perform comparing to the bank itself. I'm happy to see that like the microfinance sector would still be in like taking the lead on a disbursement, as well as like control the portfolio quality itself. And happy also to see that the red zone for the microfinance sector is actually below 5% as intended, but as you commented that in the next couple of months, like it will go back. So it's a matter of us, like together monitors it and see how we would stick into it. So this is a good time to then hear more about, like what we are doing next on the lending guideline project phase 3 and where we are. So Daniel Rosas, please do share with us this update, so then we can put things together and see what the projects could benefit the sectors, and going forward what we should help the industry to move on in a responsible manner.
Thanks, Woody. Good morning, everyone. Good afternoon. Nice to have you here on this. This is literally the opening of the European Microfinance Week. It's the very first session we have, so it's extra special. And those of you who are taking part in the conference, I hope you'll find this online experience an interesting one. And those who are not, glad to have you here. So let me take a few, just a few minutes to go over what we've been doing on the research side behind on the Lender Guidelines project. So last time that we did this presentation at European Microfinance Week which is when we started this action group, we had just started the research, what was called the phase 3 research, and we had some early findings. Since then, we have carried out additional surveys up until March, and then because of COVID, we sort of had to pause, and we have restarted in roughly September. So what you're going to see is basically the findings through March, and then I'll catch you up on what's happening now. So a quick thing on the methodology. So far, we've done a survey of 200 households across 7 provinces in the country. So again, this is all up through March. The selection of these households was based on criteria that we defined ahead of time using CBC data. And we're looking for very specific profiles. So for example, some were multiple borrowers of a certain kind, others were red zone refinancing and things like that. And you will see that when I go through the findings. And the methodology we developed was a fairly intensive interview of about an hour per household. A lot of it is qualitative. We also go through and do an income assessment. We do a PPI score. So we capture the components to calculate PPI. And so it's a pretty large interview. And within that interview, we have 11 questions that make up what we call the over-indebtedness index. Those questions are a mix of qualitative and quantitative. So some of them look at the share of income that borrowers use in order to repay the loans. Some of them look at things like levels of financial stress or debt stress. Some look at financial capability. Would they be able to access additional loans additional funds if they needed to? And so it's really a range of factors. And then we compile them into a standardized score that's just on a scale of 0 to 100. Just as a note, the score is a theoretical score, so 100 would be the highest one you could get, a 0 would be the lowest one you could get. We don't expect any observations to actually have a 0 or 100 itself, because that means answering every single question at the highest level. So for example, if one of the questions is, how often do you have to make sacrifices in order to make loan payments? I believe the most frequent case would be every single time. Or if you have a question of, how many sacrifices have you made? And we go through a list, how many sacrifices have you made in the past, I think, year? And we go through a list, taking children out of school, reducing food, and so on. It's a list of, I believe, a dozen or 13 indicators that are drawn mostly from Jessica Schick's work, but also from elsewhere. So to get a score of 100, you'd have to actually say yes to every single one of those. And even the most severe cases, that's unlikely to happen. And likewise, it's very rare that you would get a 0, because that means you've never sacrificed anything, you've never had any repayment troubles, you never worry, and so And we also kind of tested that score against different sets of indicators, more the qualitative ones, more the quantitative ones, just to see that there's consistency, and there is. So these are the outputs of all of the 200 interviews across the 6 different profiles of clients that we looked at. And what you can readily see is, for example, the one on the left, which is that's our control group, that's our benchmark. We try to sort of define what would be the low risk borrower group of borrowers. So people who have only one loan and have not done any high risk refinancing in the past, I think, 18 months. So that's our low risk group, and so we use that as a comparison for all the others. And the ones that really stand out is the multiple borrowing ones, the first 2 columns, especially what is part A, which I'll describe in a minute. And you can see, especially that one, it's on it's a highly robust finding, despite these samples are fairly small, but this is a robust finding in the sense that even in a small sample, the difference is so large that we can say that within 80% confidence, there's just a very observable statistical difference between, that first column, the benchmark, and what is multiple borrowing part A. And then with the others, I'll talk shortly. So just to give you a little bit of an idea of what the score means. So here's the highest calculated score that we had in the 200. It's a score of 91. And so this woman had actually 8 loans. 2 of them, well, it's actually, it says, the way she described it, she said there were 3 loans, but in fact, it turned out that one of the loans was refinanced, so that she had actually 2 loans from Acleda. But the total debt was close to $20,000, I believe $17,000. And she was highly over indebted. In the end, she actually wound up having to sell her house, and it's a very sad story. And it is in fact one of the case studies that we included in our land sales study, which I'll talk about later. So in any case, when you look at a very high OID score, it is a strong indication of somebody who is at high risk of over indebtedness. By comparison, here's somebody who's right in the middle. I just took a score that was at 50. And what you can see is somebody who has a pretty large loan from a bank, from ABA, $18,000, but their income is not so small, and the loan was also used to buy land and for a business investment. And she seems fairly comfortable. There were not too many. She didn't sort of mention too many sacrifices or too many qualitative factors that would indicate high level of over indebtedness. But even so, it's not 0 either. So hence it's this middle ground, at 50. And then the last one I'll give you as a comparison here is the very, very lowest score that we observed. It's a score of 7. And this woman actually, technically, she didn't really have a loan. And she had a loan in her name, but it wasn't really her loan. It was her daughter paying the loan. So in effect, she's really has no debt. And so as a result, you saw very few indicators that suggested over indebtedness, because in fact, that's what it was. Sorry, I take that back. She had one loan, which is a small $375 loan from Amrit. But indeed, it's still very, very small. So I hope that gives you an idea of the methodology and how to look at the index. There are no specific tiers that we can say, okay, well, above this score, a person is severely over indebted. Below that, they're not over indebted. These are just relative measures, and the higher you're up on the scale, the higher the risk of over indebtedness. But what I did do to make things easier is to tier it into 4 groups. Just 25, 50, 75, so the quartiles. And there you can see the differences really jump out very, very clearly. So if you look at the far left column as the benchmark, you will see there are, in fact, some people who score at the top quartile, just very, very few, but there's still some. And about a quarter of the sample scores in the sort of above 50, in the mid. So there is over indebtedness. It's not zero, and I think it's one of the findings is that whatever methodology you use, you'll still find clients who score at a high risk of over indebtedness, even if all the other factors look to be low. And I think that's inevitable. It's also the nature of over indebtedness itself, which is it's not a precise measure. But I think what's important to us is to compare other types of clients and other types of loans to that benchmark. So if you look at the multiple borrowing, the second column, these are clients who have more than 3 loans. So the multiple borrowing rule in the current guidelines as written says you cannot have more than 3 loans of any kind, but if you have 2 loans that are individual loans, you cannot have a third. So that's the way it's written, and hence the part A is not more than 3 loans of any kind, and the part B is you have 2 individual loans and you cannot have a third. So the part A is, you can see, really different from the benchmark, where a sizable majority, 63%, almost 2/3 of all clients score above 50 on the over indebtedness scale, and almost 21% score at above 75. So it's by far the highest group. So the risk is clearly high. And on the other hand, you can see very few clients actually score at the bottom quartile. It's only 9% that actually score below 25. So clearly there's a stronger relationship between someone who has more than 3 loans and the risk of over indebtedness. If you, on the other hand, you look at the third column, which is part B, it's kind of in between. It's not as bad as part A, but it's certainly higher than the benchmark, and so it raises a question of how to approach it. So let me go forward and kind of I've kind of discussed this already a bit. The one thing I would emphasize about part B is that the statistical significance of that difference. So you can see 41% score in the third quartile and 6% score in the fourth quartile in terms of over indebtedness risk. The sample is small, and so while it's significant at 80% confidence, it's no longer significant once you go up and you sort of require higher confidence. And kind of to explain this, maybe if I go back briefly, if you look closely, you see column 3, the bottom range of column 3 at 80% confidence is 41.3, meaning 80% confidence that an average person in that group would fall between 41 and 50 on the OID scale. And if you compare the low risk group, our benchmark, with an 80% confidence, the average person in that group would fall between 33 and 41. So the two are almost overlapping. Not quite, they're just barely apart by 41.3 versus 41.1, but it's still close. And considering the small samples and other factors, which we'll talk about in a moment, we kind of felt that this is not nearly as big a difference and not nearly as clear a finding as the part A, which is a vast difference. There's really no overlap of any sort. So I'll go back to here. One thing that I think really stood out, and one way kind of to think about it, is if you look at the very top quartile, so people over 75, for the high risk, for the part A, so more than 3 loans group, people are 7 times more likely to fall in that category of very high, the top quartile of OID, relative to the benchmark. Whereas if you look at part B, the risk is higher, but it's only higher by double. So it's just a difference of quite some factors here. And so the other thing that we decided to look at is what are the current compliance with the rules as currently written. And the reason we tested the part B the way we did. So what we basically said is currently, what we saw is currently compliance with multiple borrowing is really poor across the sector. If you look at MDIs, the compliance, 3 to 5% of loans disbursed violate the rule. If you look at MFIs, 9 to 13% of MFIs, 9 to 13% of loans disbursed by MFIs during the last 6 months also violate the rule. And this is, by the way, during the pandemic, these observations. So if you go back further, pre-pandemic times, I think the violations were higher still. And the interesting thing, though, is if we factor out the Part B portions and only keep the Part A, meaning, hey, did we violate, we have more than 3 loans rule, most of those numbers go way, way down for both MFIs and MDIs. So there's a very, very large gap, and it's a violation of Part B. And so one of the feedback that we got, and sort of it's, I think, consistent with the market trends, is that because of the way Part B is written, and it specifically relates to individual loans, right? Once you have 2 individual loans, you can no longer have a third. Over the last 3 years, 4 years, since the rule was actually put in place, there's been a real shift in Cambodia away from group lending. And so therefore, a lot more borrowers who previously may have had 3 loans and they were group loans and were qualified, or they had only 1 individual loan and 2 group loans and they therefore qualified. As a number of those people has shifted to having more individual loans, even if the total number of loans hasn't changed, the violations of the rule have increased a lot. So this is kind of the situation we're in, where by many metrics, you could argue that the rule is really untenable. It's being violated at such large amounts. And also because the research demonstrates that Part B rule is in fact much less risky. And one important caveat here, we defined Part B not as written in the rule, but we said, so long as a third loan is small, so either it's a group loan or it's less than $1,000. So for those clients, the risks are vastly lower than they are for sort of the Part A section. And so what we are proposing, what we propose to the CMA, is to actually amend the lender guidelines and say, allow the lending of the third loan so long as it's a group loan or less than $1,000, and remove that Part B component altogether. So more than 3 loans is still not allowed. 3 loans is allowed so long as it meets those criteria. And then follow up with letters of warning if the violations exceed a certain threshold. Here we put 0.25%, but I think that decision is going to be up to the CMA. And so for us, it's a way of sort of, the rules were always intended to be dynamic and kind of reflect market situations as they currently are. So if there's a reason to change the rules, it's better to change them rather than to keep them in place and have them be widely ignored, which is sort of what's happening now. A quick sort of update on what's happening on the land sales research and the other work. So on land sales, we have been asked to start on this work in the fall of last year, and as we did our prep, we're basically ready to start doing the surveys in February, and then COVID started in March. So we had to pause for quite some months, and then we resumed. We wound up doing actually a short test of about I think a few dozen households in March, and then we stopped, and then we did an additional 177 in July or August. I forget when exactly. And of those, we actually had quite some difficulty finding families that sold land, and there was cases of real sort of distress sale. The few cases that we found that struggled with debt and sold land as a result, the land they sold was not their homes, and not even their farms. So this was land that was vacant or was not being used for farming. And then we did that one example I mentioned of one of the clients that we interviewed for the lender guideline study, one of the 200. So that is one where we were able to do a full in-depth interview to understand the situation of her land sale. And that work is still in progress because we need to follow up and interview the staff of the institution involved. And then we are also following up with a couple more clients. And actually, I just got an update from the research team this week that they just completed their survey and they're writing up the results, and they found a couple more cases. So I think sort of the macro picture for us is that we've had a hard time finding families that sort of fit the profile of somebody who sold land in a real debt stress situation, and that sale of land really was core land, meaning it was their farmland and they relied on income, relied on it for income, or it was their home itself. Those cases are really, really hard to find. And in that sense, I think that's a good thing, because if it was easy to find, yes, it'd be easier for us as researchers, but that would also mean that it's just a much more common situation, and it's really not. It does exist, it's out there, we have found a few, but we have to make quite some effort to find them. And so we're working on this. We hope to have something by early next year, and sort of we're targeting maybe about 10 case studies that'll be sort of fully worked out, where we get to interview both the household and also the staff of the institution involved, and those we'll write up. And the last part, which is something that Boran mentioned at the outset, so there's been a shift towards a joint sort of client protection framework at the sector level, not just within CMA. And so we have started working with the ABC in order to find ways to develop guidelines that would be sector specific. And the very first step that we agreed we will do is we need to define what is the relevant market that we're talking about. And so we need to define what is a microfinance client, what is a microfinance loan. That would be a consistent definition, whether you're looking at a CMA member or you're looking at a bank or any other institution. So that's work in progress, and we hope to get that done by the end of the year. And we're starting that with working with the CBC. So that's it from my side. Obviously, if you have any questions, please don't hesitate.
Yes, so before moving to Elizabeth, given a lot of information to digest here from Daniel, there's quite a number of points here that I wanted to highlight. It's a good progress on this OID in that it's good to see that linking with the lending guideline rules, the multiple loan rules, and how you define the sample, and how it's come up to see that there's proved to be a strong relationship between OID and this Part A loan, the multiple loan below about three number of loans. So hopefully it's not comparing to the number of years before, there's not many clients that has more than 3 or 5 loans from that perspective, right? So we would be interested to further look at this to understand whether it's a really loan that is multiple across institution, and we also somewhat worried about the multiple loan or within the same institution itself, right? They keep renewing or doing the top up, which I don't know whether it's a capture in this number of loan as you mentioned, or in particular just counted the number of MFI. So then it's also interesting the observation to see that it's very difficult to find the sample clients on the land sale, despite, I'll just see recent news on 15th of November, there's a quote of a lady from Syria who's still, very worried that the institution would come and ask her to sell land. So with all this, it's really hard to link together, whether when we really look out for these people, they're not there, or are we really not able to identify the right sample? But having a CMA support, having CBC, numbers that you are trying to crunch and identify these people itself, it's actually from my, view, it's good news that you didn't find them, but also it's a bit of a question mark, why are all these medias, able to screen 1 or 2 persons almost every month? So a bit of a thought over there to guide the conversations, but maybe let's do a quick round of this to bring Elisabetta also, into the pictures here to speak about, how she would see it from her perspective, thinking to the ratings that or CPP certification that microfinance is continuing from Smart Campaign. Quite sad news that this Smart Campaign is, already closed. But good news to see that the rating agency is picking up. And then based on this all together, then we can open the floor to everybody to, interact, go into your question, go into how, a CMA is looking at it and how the microfinance would, look at the lending guidelines in the future, capturing how they would want to do the rating, the CPP certification. Elisabetta?
Sure, thank you, Vuti. And thank you, Daniel and Boran, for the presentation. Very interesting and additional food for thought. Thank you very much. So in terms, as Vuti already mentioned, the Smart Campaign, and as you all know already, the Smart Campaign is retiring its brand, but good news, we're not giving up on the certification process and on the certification, and we're working a lot also with the SPTF to ensure that the certification and the client protection standards remain a common language in the market. But there will be changes probably in terms of process, but the overall framework will be the same. But I won't go into details in this as there will be a dedicated session on this on Friday. Regarding the lending guidelines, as you know already, the lending guidelines were endorsed by the Smart Campaign, and certified institutions were required to comply with the lending guidelines. So as certifiers, we have assessed the compliance of the institution with the lending guidelines. We will not stop doing this. We will still looking at the compliance of the institutions with the lending guidelines. Especially also, it's good to know that these are also being discussed with the banking association. So they're becoming guidelines that might have also a larger play a larger also role in the sector. So we will continue assessing the compliance. Why? Because there are an industry initiative. There is a common understanding, and they set a clear bar in terms of what is potentially risky and what the institutions have to do in case they reach these high risk areas. And from our perspective, they're very useful because they add evidence to our own assessment. So they provide further information and help us to assess whether the institution's strategy, underwriting process, and internal controls are adequate to ensure responsible lending and to avoid client over-indebtedness. And so we will continue using assessing the compliance, and also, of course, integrated any changes that might happen to the lending guidelines, as Rosa was probably mentioning about the multiple loans rule. Yeah.
Yes, understood. Thank you, Elisabetta. It's indeed, since this is a self-initiative, by the CMA, and we will also be involving ABC. Also, this project has been highly valued by the regulators as well. So, be happy to see that microfinance is continuing following this process, and hopefully, like other qualified waiter would also looking at the same. So I'll, like all that details, definitely, I'm sure that throughout the conference on the separate session, we will be discussing on this. And but here, not just echoing that it's important. Also, I believe from an investor point of view, it's important that like we support the industry initiative, be able to like monitor it and have some validation from third parties like you. So it's indeed very useful. So I think we, like we slightly a bit over time, but I think it's so far it's been useful. It's a lot of a helpful or useful data set to show here. Eventually, like when the project is completed, I'm sure that like more findings, fine tuning the report would be coming, and then all of us would have a chance to like have a look at it one more time. But as we speak, from the current findings, let me open the floor to like all the participants here. If you have any questions on any like presentations or numbers that we shown here, I will like make sure to have the panelists trying to answer your questions. And I might have also a few follow-up questions as well. So feel free. You may want to raise your hand, or like can also just unmute yourself and feel free to raise the question. Anyone?
Yes.
Okay.
Hello, everyone.
Hello.
We can hear you.
Can you hear me? I put the video on.
I think the sound is a little going in and out. If maybe better in that case.
So it's
maybe due to connections, I guess.
Can you type your question then in the chat?
Okay. I will type the.
Yes, please do so. Will share that everyone. Meanwhile, if someone else, like having questions, feel free to do so while we're waiting for Philip's question. It looks like we have done a good job here. Everybody understand everything now. So, well, like while people think about what to ask, maybe, like to keep the panels, like lively, it's maybe good, like either from Bombaran or from Daniel to give us a bit of a flavor on, like the ABC involvement, right? It's happy since the lending guideline has been in place, like most of the institutions have been trying to say, well, like we tie up our leg, our hand, but at the same time, we leave this bank able to do this and that, especially those banks that is coming down scaling to the microfinance market. So now it's a good progress that we are able to speak to ABC and have them, like get them to interested to participating in this lending guideline. Any, like thought to share here how you would want to look at them, like given obviously, like they are different animals comparing to, like most of the institution in the CMA, right? some of the MDI who's already at the bank, I would imagine they're familiar with this, but yes, they are now having a different portfolio to look at. So how are we looking at them differently? How do we want them, to engage in these projects in a meaningful manner, so then they don't feel like it's just a matter of for the sake of joining, but then it does not really benefit them to some extent.
Boran, I think that's more for you. Is more
Okay.
about
Okay, yeah. So I think it's so I think at the association level, at the banking association, I think the management, the council, or equivalent to the board of the association, are very supportive because we also get the clear direction from National Bank of Cambodia as well that ABC must reviews and work with CMA to adopt the guideline. And there's, as a result, in the memorandum of article of the Banking Association, which reviewed last year, one of the objectives of the association is to also adopt the lending guidelines. So I think at the governance level, at the high level of the association, it is very clear that the council member who representing the sector actually are very supportive, very keen, and that's one of the reasons why they also set up the financial inclusion committee, which they then asked me to chair the committees as well to links between CMAs and the ABC, looking at customer protection, lending guideline, financial literacy, and so on and so forth. At the individual level, I believe there are 5 banks who quite intensively working in overlapping within microfinance space, agree to join the survey, which I think Daniel is working on. So which means even though at the bank level, who also have a lot of customer base which competing directly with microfinance, they are willing to also to work with our team, our research, our consultant to actually see how the lending guideline can be implemented. One of the challenge I would foresee now is where do we actually draw the line between a customer, between microfinance banks and purely banks, a customer, because the bank, they also say yes, I have 50 banks who some of them actually focus on only corporate customers on a different segment which are not necessarily overlapping with microfinance. And yes, based on the data, only I think 4 or 5 banks who actually have a lot of overlapping activity with microfinance institution. So we looking at that. I think part of the discussion so far, I think our CMA team working, I'm sure they are talking with Daniel in terms of how do we define a customer base where we can apply across the sector that any customer who in these categories or borrow within these amounts of money, so follow the same rule example. So we haven't been able to come up with a final conclusion on what the criteria look like, but I think in general we all agree that we will agree to have a definitions or the criteria to define a customer where everyone in Cambodia who providing financial services, lending, will actually should apply the same rule across the board, so that there's no more differentiate between MFI and banks, and it doesn't create an unfair competition among the sector. So I think to be frank, I think ABC now keep asking me, can we move faster than what we do so far? So they seem to be also very keen, but I can tell you there are challenges which we also have to deal with banking sector as well. So, and the same as we dealing with the challenge which we are dealing with our 100 member. Not everyone will be happy with what we will provide. And not everyone will agree with our definitions and our guidelines. So I think those are challenges I would foresee, and I think with the support we get from NBC, from the council, from CMA, I believe we should be able to deal with that.
Mhm. Okay, yes, it's a great update and good to see ABC want to move fast. So now that it's up to like the CMA side and the project team to work faster. Good luck with that. So I see Christopher's hand. I also see Philip questions are coming. So given that Philip is coming first, let me go through that quickly. It's mainly like sectors. Related questions. Not the first one is not really related to the lending guideline, but it's like it's good that you can give a bit of an observation there. Bongran, the question is for you. What has been in the sector the percentage of restructuring loan due to COVID? What are the perspective of the medium term on the crisis? Given like the border closures, the impact on the tourism is quite high. So what is your views on that? Maybe quickly, I think we have a bit of a structural loan number in the chart already, but it would be good to give a quick view for Philip.
Yeah, so the first question, the restructure is about 12% of the total portfolio in the whole sector had been restructured so far. And in terms of, I think the impacts on, I think from the crisis, yes, I think the impact will continue. We see that because of two things. One on the not only the tourist itself, but I think two sectors actually impact the most. First one is the garment industry, which we heavily on export to Europe and US. I think while the retail store in the US and Europe doesn't really be able to work as soon as I think since in the COVID there is still are quite bad. I think the order on garment industry are very low. So we see the impact from garment industry continue to be the case. However, if you look at the amounts of number of people who lost their job, I think it remains stable at around about 200,000 workers. I think out of about 700, 800,000 workers. So the number doesn't change. We see new factory actually open, focus on other sector besides garment, and besides footwear and garment. We also see government actually set up a SME cluster in different province as well. So I think those actually have been helping to transform some of the job. The tourists will continue to be impacted in the next, I think, at least 1 year. I would not expecting anything come back in 2021. The different thing is that this crisis also actually enable local economy, local tourists. I think while Cambodian also, travel outside for tourists outside Cambodia a lot. With the COVID, since they cannot travel, we see a lot of Cambodian also travel inside Cambodia. It's not offsetting the tourists from abroad, but I think it does actually compensate to a certain extent. So in that case, since Cambodia never really locked down, I think the movement in Cambodia had been quite a great help on the tourist sector, especially to a segment where it geared toward local and low income or medium income kind of customer base. The hotel who geared toward high end foreign European American kind of tourists, I think they continue to close down probably until end of 2021.
Yes, I would echo that. The local tourism was actually, increased quite a bit, given that, we are not going and able to travel anywhere. So we are exploring quite a bit inside the country itself. There's a lot to explore. But yes, it will never be able to compensate the level of, the international travel anyway. So
Hello everyone. Sorry to cut you. I'm Clara Dufresne from Proparco, and thank you very much for these very interesting presentations. I also have a very quick question. Have you seen a deterioration of the respect of the lending guidelines due to the crisis? And do MFIs tend to lend, for example, new loans without following the rules as strictly as they used to doing it before?
No, I don't. I would not see that from the data I got. I think from the dashboard we have, I would not see that, and I don't think Cambodian microfinance would try to lower down their standard as well, just for a sake of lending, because we all know, if we just lending, I think, and the customer cannot pay, then I think the NPL will also go up. So I would say, look at from a data point of view, I think microfinance has been very conservative compared to bank, basically in terms of lending. The recovery from the COVID, I think microfinance actually very slow. We probably do about 50% of what I think we did pre-COVID actually, compared to bank, which they actually do the same as what they did pre-COVID already. So I think in that sense, because of the customer base we work with, because of the the type of customer who we deal with, and also I think because of the work within CMA, which we work together with everyone in terms of how do we want to manage the sector risk. I think the lending had been quite slow, and I would say a big player even take a lot more conservative role to actually in terms of their lending process.
Thank you. I think Clara referred to one of the slides that Daniel mentioned, the micro-August number. Can you comment that a bit, Daniel?
Yes. So in fact, what I would add is, if anything, the COVID crisis itself has actually improved compliance a bit, especially on the refinancing side, which you saw from Boran's slides. I have seen just in the past 2 months, not the entire CMA, but at least a few MFIs kind of start doing a lot more on that front, and sort of the violations have started increasing, but again, not for all MFIs. And on the multiple borrowing side, I think this trend of reduced compliance with the rule as currently written, I would attribute it a lot more to the long-term change in the sector rather than COVID itself. So I don't think COVID itself has had much of an impact.
Okay, so thank you. It's clear. Clara confirmed. Christoph, you've been waiting quite a while.
No problem. Thanks a lot. Thanks to the panelists, and thanks to e-MFP for organizing this session. I think it's really great that at least once a year we touch base on this topic, at least for me, who is not based in the region. I had just 2 questions to Daniel on his research. The first one, I mean, quite generally, I mean, does your results on the broader group, what you call the sort of the control group, say something on the general level of over indebtedness? I mean, I remember last year we talked about if going to villages, I mean, it was very, very easy to come across people that were in trouble. So I'm just wondering if sort of this research paints another picture or not. Also related to I think from the beginning, the slide on the loan to income ratio that showed sort of 80% of loans being below 50% loan to income ratio. And then the second question is about the land sales. It's sort of reassuring to hear that these are hard to find. But I'm wondering, I think from the NGO reports, I think the trouble was also sort of the threat of selling land, and to what extent you sort of incorporate this in your current research. Thanks.
Great. So thanks a lot, Christoph. So for the first question, the problem is the research that we did and the specific methodology we applied we don't have data for outside of Cambodia. So it's hard to say, okay, based on this finding, like, what does Cambodia look like relative to other countries? I can tell you that some of the stuff that we've looked at in Mimosa, which is in fact comparable across borders, suggests that, I don't know if over-indebtedness itself is more widespread, but at least the risk of over-indebtedness is. Right? This is where it gets really tricky. And I wish it, you know, there was a way to answer it more easily. Also, if you look at the studies that Blue Orchard did and Oiko Credit did on over-indebtedness, so you look at the 2013 one, which is some years ago, but also the 2017 one study, which is more recent. They included a comparison using the exact same methodology to a few studies. I believe it was to Bosnia in 2009. So using the same methodology. And there it suggested that actually Cambodia was kind of comparable to what Bosnia was at sort of the peak of their crisis. So in that sense, it's not good. But I don't have a lot more, you know, I wish it could provide more input, but it's hard. On the second question about land sales, sorry, I'm just trying to, you were asking about, sorry,
Yeah,
can you just
to what extent you know, you incorporate the threat of,
yes,
selling land,
right,
because I
that's
think
right.
you know, that's maybe once the land sales occur, it's really sort of the last.
Yeah, no, absolutely. One thing that we noted, and this again goes back to the Mimosa study, is that when we ask people this general question, okay, if you don't pay your loan, how will lenders collect? And the number one answer is, oh, they're going to send me a reminder or they're going to call me. But the number two answer, the second most common answer is they're going to take my land. We've not seen this in any other country outside of Cambodia. We asked this question in what now, 11 countries? And this is the first one we've seen that widespread. You see it show up a little bit, but not at this level. So there's a factor in the sector where this is very much in borrowers' minds that they know that this can happen. Doesn't mean it does actually happen. And there are some other things that I would add to it. So we do come across land sales fairly often, but they don't tend to be this, oh, I lost my home. They tend to be, I sold this little plot that I had that I bought 3 years ago, where land is being used a bit as an asset. So it complicates the picture a lot. And so one of the things we're trying to do is to say, to distinguish between, you know, all land sales and look specifically to those that says, okay, from a client protection issue, this is a real problem. And those we kind of want to focus on. Whereas the broader use of land as an asset, I think also reflects the changes in Cambodia, where people own a lot of land and they can often buy and sell land. There's a lot of sales happening in general. There's a lot of activity. And I think the rate of growth of the economy, all of that kind of drives towards use of land as an asset in the way it doesn't really in many other countries. So I think that complicates the picture a lot. And I see actually Philippe also asked the question about land sales and Licado, and this kind of relates to that a bit, which is I am not so sure that they're as careful in distinguishing between different land sales. I think they say land sale, that's it, it's bad. Whereas we are much more conscious of, okay, number one, was a sale because of debt stress in the first place, because it isn't always. And two, if it is, what did they sell? And how critical it was to their livelihood or their well-being. So that's so the real distinction we draw. And I always find it curious that in their reports, they will tend to sort of show a couple of stories and they say, well, we talked to 25 people and they sold land, and here are the 3 stories. It's like, yeah, what about the other 22? Is it because they don't actually look like these do? So I'm not so sure. They're not quite as transparent, I think, in their research. And they also obviously have an agenda as well. But and then one small point that Philippe, you mentioned, do I know what their plans are? I don't, and we have not shared this with them. We will once we're ready to publish and it's going out, then we will sort of direct them to look at it. But we're very, very cautious about doing any kind of sharing of data in, we don't see them as friends necessarily. Let's put it this way. So Christoph, I hope that answers the question. And yeah.
Thank you.
Okay, anyone else who have a further question for our panelists? Very quiet.
Yeah. I just had a question on the impact of COVID on loan sizes. I think some anecdotal data indicates that there has been sort of a natural reduction in loan sizes because of COVID. Do you think that this will help us with, let's say, controlling over-indebtedness from a long-term perspective?
Thank Aditya. Maybe Bong Boran, quick comment on this based on your observation.
I think it does slow down from what we see in the data, which mean less disbursements. I think some of the mentors are more careful, and I think review their current practices and policies, and see how they can actually avoid maybe higher non-performing loans in the future. So I would say I think this pandemic did also give another alert to everyone to looking at how do we run our business, and how do we actually mitigate our risk. However, I would not necessarily say I think the level of competition in Cambodia will actually slow down. As I would say, when I see the number which I share, I think you can see the trend, even though in microfinance, even though it's not as fast as a bank. I can see that yes, after 2 to 3 months, when there's no more COVID case in Cambodia, when things start moving quite easily, we see a number of aggressive players start doing a lot. I think probably as aggressive as they actually do before pre-COVID. So in that sense, I would say, in a near future, if there's no cause of concerns in Cambodia, I think the level of competition will actually bring back probably to a pre-COVID kind of situation. In terms of, I think, bring risk to the sector, I would not see a huge difference or big difference, because number one, I think many of them still follow the guideline, which I think we looking at it on a monthly basis. The second, the focus of a certain microfinance are also quite different. You will see Cambodia, I think banking sector would involve a lot to a different level. I think probably from a very collateralized based lending, which we saw in the past 5-10 years, toward probably non-collateralized business SME financing. I think while the country also now focus on helping local SME to increase their capacities, their productions, their export as well. So I think those are a very different kind of evolution you will see in Cambodia, including macroeconomy and financial systems. So that's how I would see it.
Does that answer your question, Aditya, or you seek any further clarification?
No, I think that's clear, Uti. Thanks so much, Bong Boran, for that input.
Thank you. And Tess actually passed the question on the chat box here, given her connections. Let me read this. This question is for Bong Boran again. She just wants to clarify with regard to the ABC involvement on the lending guideline. So she's applauded this development, but wanted to clarify whether this is somewhat, like coming from the NBC who asked them to do this, or is more on voluntary part of them to participate. And so yeah, I mean, that's basically the message. Do you think that, like this is somewhat coming from NBC, or it's a voluntary, and whether there would be a formal regulations with regard to the compliance or the lending guidelines itself? I think we have touched on it.
Yeah, I would say it's both. I think they do have some willingness, but also they are a push to get their willingness to the level where they also want to move, I think, a bit faster as well, because we have been working and lobbying them, I think, about 2 years, 2 years. At the same time, we also lobbying at NBC at the same time. So I think generally they understand, and I would say if they don't really agree to it, I'm sure they would tries to negotiate and disagree, even though I think that suggestion from NBC. So I think it's both, put this way. I think in terms of getting into the regulation, I would not see it, even though NBC also don't believe in having these guidelines as regulation would actually be helpful. Because I think number one, we still have to learn and develop and adjust. Number two, NBC would looking at I think from NBC point of view, when we talk to them, we say they would be more than happy to see the association, the sector, do your own more toward regulation, because the risk, you do your business, you actually want to safeguard yourself. Why you want regulator to actually just force you to do everything regulator want, and that doesn't really give flexibility and doesn't really adjust fast enough toward the change in the sector. So from that perspective, I think we also very happy that NBC support us, but also don't want to regulate, so that we also can adopt faster. I think on the second part, I think NBC also happy because they say, yes, as a sector, we are more mature. We know what the risk we take. We want to safeguard ourselves without the parents to actually always, tell the kid what to do. So I think they would want to see us as a grow-up adult, not as a kid, which, the parent have to actually tell what to do every day. So I think that's how our communication or a discussion between ABC, CMA, and NBC so far, and I think that's the approach we move forward at least in the next, I think, 2-3 years. And I think after that, we will see how mature our guideline is, and if something that can be adopted into the law, I would suggest in the next, probably after the next 2-3 years.
We are in our last minute of the session itself. I'm not, sure whether we can take one more question or we, we conclude the session itself. So maybe I'll give a last chance here if anyone want to speak before we wrapping up. Okay, it's
Monday from CMA.
Okay, yes,
yes.
on.
Yes, I think our chairman have mentioned all the things that we are working on, but would like to add a small part on consumer protection. Consumer protection is also an important part we would like to work on together along our self-regulation aspect. We are start working with ADA, SPTS, and very happy to also working with the rating agency, that in the future, because there was a transition in smart campaign, and we try to engage with the global players on how we can contextualize this into the Cambodian context, where it's more accessible, and also building the capacity at country level that align with the international standards. So these are also the area that we also going to work with our partner in the country, including good return as well. Yeah. Okay.
Great, thank you, Bang Wandi, for sharing this. So I think, in short, Cambodia's, microfinance sectors is somewhat we can say that they are not taking client protection lightly, but it has been quite serious in the agenda, institution-wide, also from the association-wide, as well as, from the regulator point of view. So having said that, you know, like all of us investors here are standby and happy to continue working, you know, like to support the industry. I think a number of us here have been already be a partner or sponsor to the lending guideline projects. Hence, you know, like we appreciate the feedback. I'm here talking on behalf of all of us here, so thank you for that. And looking forward, you know, like to the participation of the association, as well as the, you know, like the finding of the study itself, including, you know, like the land cell finding. I would not say, you know, like this is the end to it. I'm sure, you know, like there's still some noises from the you know, like our the NGOs who's been very focusing on the sectors, but I think there's always you know, like a way to deal with it. We now learn to live with the situation. So each of us have our view in terms of, you know, like how we would translate all of this information. So I would say, you know, like it's good that we have someone outside of the sectors, you know, people like the NGO who are looking at our sectors and raising, you know, like what they see as a concern. So it's a matter of us who are the players in this market, you know, like filter this information and see whether these are the real concern that we've seen and continue to improve our practices. So really, you know, like enjoy the listening to these sessions and really looking forward to the upcoming result of the phase 3 project, and indeed applaud the association here who having a huge progress in bringing the bank into the lending guidelines, you know, like project here. And while CBC is not here, you know, like we should also thank them for, you know, like helping the team, the project team, and as well as the industry here in providing more and more the useful data for, you know, like any future analysis. So with that, you know, like I would like to thank all the participants here who spent your valuable time participating in this session. And I would say enjoy the rest of your day and, you know, like the rest of the conference for those who continue to participate. Thank you again to our panel as well who shared your presentation and also your view.
Thank you.
Thank you so much.
Thank you. And thanks, Huti, for excellent moderation.
Thank you.
Thanks, everyone.
Bye-bye.
Thank you very much, everyone.
Bye.
Goodbye. Bye-bye.